Good afternoon, viewers. Today we will dive into the latest developments in both the traditional financial world and the cryptocurrency space, as significant legal and institutional changes shape the future of the markets. In the ever-evolving landscape of digital assets, misinformation and speculation often take root, persisting across multiple market cycles. Recently, a prominent voice in the cryptocurrency community, All Things XRP, sought to provide much-needed clarity regarding one of the XRP community's longest-standing misconceptions: the belief that Ripple and Swift are engaged in a formal collaboration. In a recent public statement, he firmly asserted, Ripple and Swift are not partners. His goal was to put an end to the continuous speculation that tends to resurface whenever the market experiences heightened activity. According to All Things XRP, this particular rumor has deep historical roots. He pointed out that as far back as 2018, Swift had officially and publicly denied any discussions or negotiations with Ripple regarding potential cooperation. Furthermore, during the same period, Ripple's CEO made it explicitly clear that the two organizations were not working together but were, in fact, competitors striving to offer different solutions to the financial sector. Despite these clear public statements from both sides, discussions and assumptions surrounding a possible collaboration have periodically re-emerged, particularly during periods of significant news or market momentum. In his detailed explanation, All Things XRP highlighted that the recent resurgence of these rumors was likely fueled by two major developments involving Ripple. The first was Ripple's high-profile acquisition of Hidden Road, a prime brokerage platform, for a reported $125 billion. The second was the company's strategic launch of its new Lust stablecoin towards the end of 2024. Many XRP supporters interpreted these bold moves as signs of Ripple's increasing integration into the traditional financial ecosystem. The timing of these announcements coming shortly after the Securities and Exchange Commission decided to withdraw its appeal against Ripple in an ongoing regulatory case further added momentum to the narrative of a potential strategic alignment with major financial players like Swift. Adding another layer of complexity to the situation, a significant incident occurred in March 2025 involving a well-known social media account watcher, Guru. The account experienced a security breach, during which several misleading posts were made. These unauthorized messages falsely claimed that billions of XRP tokens were locked into escrow arrangements and suggested incorrectly that Ripple and Swift had entered into a formal partnership. Although these falsehoods were quickly addressed and refuted by credible sources, the damage had already been done, as confusion spread rapidly among less informed community members, keeping the rumor mill alive. It is important to recognize that Swift has indeed shown growing interest in exploring blockchain-based solutions to enhance its traditional payment infrastructure. However, All Things XRP was careful to point out that when Swift chose to initiate testing for cross-chain interoperability, it selected Chainlink as its technology partner, not Ripple. This distinction is crucial, as it highlights that while both Swift and Ripple are innovating in overlapping domains, there is no direct working relationship between them. While it is true that major Ripple clients, including leading banks like Santander, continue to utilize Ripple's technology for various payment solutions, this usage operates independently of Swift's global infrastructure. Consequently, the activities of Ripple's clients should not be misconstrued as evidence of collaboration between Ripple and Swift. Some optimistic XRP supporters argue that a future collaboration could offer mutual benefits, potentially enhancing the adoption and utility of XRP in the global financial system. However, All Things XRP emphasized that there is currently no official confirmation or public indication from Swift suggesting that it plans to integrate XRP or Ripple services into its network. Although several independent research papers by international banking organizations have acknowledged the innovative potential of XRP's underlying technology, Swift has not directly participated in or endorsed these assessments. A significant portion of the confusion stems from indirect associations that have been widely misinterpreted. For example, EastNets, a technology provider that licenses Swift-related software solutions, has reportedly experimented with Ripple's blockchain technology. Some observers mistakenly view this relationship as a direct collaboration between Ripple and Swift, despite the fact that EastNets operates independently and its use of Ripple's technology does not imply endorsement or cooperation from Swift itself. Another source of misunderstanding is the mutual adoption of the ISO 20022 messaging standard by both Ripple and Swift. While both organization systems are now aligned with this global standard designed to facilitate better data transmission across financial institutions, mere compliance with the same protocol does not indicate any form of business partnership or collaborative initiative between the two entities. In conclusion, despite repeated assertions and the hopes of some in the XRP community, no verified evidence has emerged to substantiate claims of an official Ripple-Swift partnership. Although the prospect of such a collaboration could potentially strengthen XRP's presence within the traditional finance sector, the idea remains purely speculative at this stage. Until either Ripple or Swift issues a formal announcement confirming otherwise, it is important for investors and community members to distinguish between hopeful speculation and documented reality. Shares of Strategy MSTR +1 and 48% showed a notable uptick even as broader equity markets experienced heightened fluctuations. The positive movement in Strategy's stock came following the announcement that the company has once again expanded its Bitcoin +4 and 0.6% portfolio, reinforcing its position as a major player in the digital asset space. In a filing submitted to the United States Securities and Exchange Commission, formerly known as a Form 8K, Strategy disclosed that it had acquired an additional 6,556 Bitcoin units between April 14 and April 20. The total expenditure for this purchase amounted to approximately $555.8 million. The company utilized available cash reserves to fund this acquisition, paying an average price of about $84,785 per Bitcoin during the buying period. Following the news, Strategy's stock experienced a roughly 2% increase, signaling investor enthusiasm toward the company's continued commitment to strengthening its Bitcoin reserves. Having transitioned from its original identity as a software enterprise, Strategy, previously known as MicroStrategy, has evolved into one of the most recognized corporate advocates and holders of Bitcoin. With this latest acquisition, the firm's total Bitcoin holdings now stand at an impressive 538,200 units. Based on prevailing market rates, these holdings are valued at approximately $47 billion, underlining Strategy's substantial footprint within the cryptocurrency sector. Founded in 1989 with a focus on software solutions, Strategy rebranded earlier this year to better reflect its current strategic direction. Today, the company is widely regarded as a publicly traded proxy for Bitcoin itself, given the close correlation between MSTR stock performance and BTC price movements. The company has consistently utilized proceeds from its at-the-market equity programs to finance its ongoing digital asset investments, adopting a steady approach to accumulating Bitcoin over time. The announcement of Strategy's most recent Bitcoin acquisition coincides with a broader upswing in the cryptocurrency market. Over the past 24 hours, Bitcoin's price has appreciated by more than 3%, climbing above the $87,000 threshold. This marks a meaningful recovery, especially considering that Bitcoin had been trading closer to the $80,000 level in previous weeks. The renewed momentum suggests that more investors are showing increased interest in digital assets, potentially viewing them as attractive alternatives amid growing unpredictability in traditional equity markets. While global stock indices have shown mixed performances recently, Bitcoin's resilience appears to be gaining the attention of both institutional and individual investors. Many market participants are re-evaluating their portfolios and diversifying into digital assets, with Bitcoin often being seen as a leading choice thanks to its established track record and limited supply dynamics. Strategy's latest strategic move further reinforces its long-term vision of embracing Bitcoin as a principal asset class. The company's leadership continues to express confidence in Bitcoin's role within the broader financial ecosystem, viewing it not just as a speculative asset but as a core component of future financial infrastructure. As Strategy strengthens its Bitcoin holdings, its stock performance is likely to remain closely tied to movements within the cryptocurrency market. Investors and analysts alike will be watching closely to see how both MSTR and Bitcoin continue to perform amid evolving global economic conditions.